The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the March 27th fabulous Friday edition of the Opening Bell on the Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a terrific Thursday. Some great basketball. If you stayed up late, you might be blurry-eyed out there. And going to be some great basketball all through the weekend for those of you that enjoy the March Madness out there. Hey, let's make sure that you and I, that we do everything we can to have a fantastic, fabulous weekend out there. Of course, the easiest way to do that is to always remember that life happens for us, not to us. It's a huge thing. It's a huge shift out there because most people think that things that happen in their life happen to them. The reality is things that happen for you. And when you realize that, when you recognize that, it empowers you to be able to find the gift in every set of circumstance that life is going to throw at you. And that's really the role of life. That's the role of the universe. That's the role of the markets out here between bulls and bears. It just simply, you know, what you and I just simply need to do is just become these wonderful pattern recognition specialists, experts, whatever it is, the label that you want to put on it. And that's really what life is all about. You know that. I know that. And one of the things that I want you to know for sure is that I'm absolutely grateful for your presence here. And I'm here to serve you however I can. So feel free to call on in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. You know, this is Fantastic Friday. That's a good thing. Of course, it's none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got Dow futures up 33 points. Are trading out at 17,569. S&P futures down 3 points at 2,045. NASDAQ up 7 points, trading at 4304. Let's take a quick peek across the globe out here. I believe the DAX is just off. The FTSE is down a bit. You've got the DAX is up 11 points as we speak right now. It's kind of been fluttering around that positive, slightly negative line here. It's trading out 11,854. The FTSE, a little bit more of an issue out here. It's trading down 33 points, a little bit of a mixed bag last night in Asia. The Nikkei off 185, about 1%. So basically a flat market in the Hang Seng, and the Shanghai was up a quarter of a point. So let's go take a look at, we've been talking about the FTSE. Got several emails out here yesterday asking, hey, how do you play the FTSE? What ETF can you use to play the FTSE? I haven't found one that has, I haven't searched high and low, but the ones that folks have sent to me, I haven't found anything with any kind of major liquidity out there. Perhaps you know one, and we could take a look at it. But at this stage of the game, as we take a look at the FTSE, I'm going to put the weekly chart up on my screen here for you. Still too early because what I noticed, number one, I had been taking a look at a consolidation break, which was this blue horizontal line going across my screen, which was the 2007 high. And once I saw price move above that, I figured, hey, we're off to the races. You got to go back sometimes further to the left on the chart out here. And when I went back further to the left on the chart, that's when I noticed that really the level that was trying to be broken through was the 2000 high out here. Now, remember our NASDAQ composite, right? That's just simply trying to get up to the 2000 level, if you will. And in the case of the FTSE, you know, that's the area that it's trying to break out of. It's a huge consolidation. But at this stage of the game, as we can say right now at 9:10 a.m., there's still trading time left in the week before the FTSE closes, a couple hours, 2 hours, 20 minutes or so from now. It doesn't look like it's going to get back above that 69.50. So on the very first week, and you always have to have follow through, right? You got to have follow through in life. It's one thing to say something. It's another thing to say it and actually do it and then continue to follow through. Hey, it's like saying I'm going to go on a diet. And then you do a diet for the next couple of days. That doesn't really last a whole long time, right? You know, you got to have follow through each and every day. That doesn't mean you can't have some of those, what do they call them? Cheat days out there. But you've got to always have follow through. In the case of the FTSE, no follow through as we speak. Now, the candle that's formed this week here, looks a little bit like a dark cloud cover. It looks like it's about halfway into the body of last week's candle out there. So that's just a forecast of maybe some stormy weather ahead. But 69, 50, 60, that's going to be the key level for us to continue to watch inside of the FTSE. Has not closed above that. This did last week, not this week. So close, but no cigar. Okay. So that's where we're at with regard to that market. Of course, what you want to know is, hey, what's going on with our markets out here? So let's go take a look at the daily contracts here. And let's start off by taking a look at the S&P. So as we look at the ES mini out here, the daily contract, what we can see here that happened and what's going on basically about right now. One of the levels you want to watch inside the S&P futures, 2044.75, your 2044.50. Why? Because as long as price trades with inside that swing point, and the top of that swing point is 2044.75, it says, hey, I may want to go visit the bottom of that swing. Well, that's the next area to watch, 2032. Right now, we have not seen an actual test of that low. We saw a close test. It got down to 2033.25, but never tested it. So what's that say? It says, at this stage here, I can't tell you whether it wants to blow out of here or whether it wants to go test the low. We can't see on its daily market profiles. That's a level of support. So we'll see if, in fact, that area can hold. If we see price fail, then the question becomes, hey, where is price likely going to head to? So if it holds, this A to B equals CD that I've got drawn out here is still in place, 2174. If it fails, let me just go ahead and delete that. If it fails, I would say we're better off looking at, you can look at an A to B equals CD. Now we can take a look at retracements out here. And you really can't look at an A to B equals CD to the downside. There's none that has actually formed inside of the daily contract for the ES Mini. So if it breaks that low, right now, you'd have to say 2021 becomes the next target area. So it's not down that much further. Why do I say that? That's your 0.618 retracement level. And that would be a normal area for price to stop. What is the market trying to do out here? And I love being in the minority camp because I don't really care what camp it is. I just simply, I look at the charts the way I look at it. I use all kinds of tools and data out there, and then I just simply report to you with absolute conviction. I mean, you don't hear me wishy-washy. It's just wishy-washy. Who wants to tune into that, for goodness sakes? Now, I don't mind saying I don't know what the market is communicating to us, but that's not the case when I take a look at the overall markets right now. I clearly know what the markets are communicating to us, and that clarity is that they are about to form the next bottom. The bottom is going to go ahead and take the markets higher in through the end of April, and then maybe a bit of a pullback, and then into the July timeframe. I have no doubt, no hesitation whatsoever that that's really what the markets are in the process of doing. Now, when is that bottom going to arrive? I'm uncertain about that because it's going to occur within the next several days. I've given you dates to look towards, but the reality is, it doesn't have to hit on that date. We'd like to find some kind of pattern that is occurring at that time. We want to see some types of bullish reversal signals out here. Those are the things that we look for. But that's what the market is doing. There's all kinds of folks that are calling for all kinds of tops and things of that out there. And bless their heart, maybe they're right and I'm wrong. That doesn't not going to change my conviction, not one single iota. Just like I have as much, when I used to do these shows out here in the morning, and I love doing it because what I know that what you and I, if you're just listening on the radio, your mobile device at TFNN.mobi, we absolutely appreciate that. My role each and every morning is to be able to tell you a story about what the market is communicating to us. It's about telling story. And that's really what our life is all about. Each of us have a story. Some of us have stories in our lives where we use those stories to empower us. Some of us use stories that are disempowering stories. And we're all visual. That's why I say if you're listening on the radio, thank you so much for doing that. But what you want to do is you want to go take a look at the archive on TigerTV. You want to go ahead and watch the show live on your mobile device if you can, because we're all visual. We are all. That's how we learn. And we learn by being able to link the known to the unknown. Let me tell you a story about them. And so I used to do the stories that would help you to lead an inspired life, because leading an inspired life, take a look at this co-pilot that, as we know right now, that took that German German airliner into the mountain area. He clearly was not living an inspired life out there. And we have a choice. We can choose to either live an inspired life or not. But let me tell you a story, because it's really applicable to what's going on, in my opinion, in the Middle East, and just with regard to you and I being shareholders. You and I are the shareholders of this country. We elect officials, but you and I are the shareholders. And from time to time, we got to fire their tookuses, if you will, because it doesn't matter which side of the aisle you're on. You have to always step back, and you have to look at both sides of the trade. That means you have to look at both sides, both parties out there. You have to look at bulls and bears when you're taking a look at the stock, when you take a look at a stock chart out there. If you don't, and you only stay on one side, you are doing yourself the biggest disservice. It works that way in everything in life. And here's the story. You know this story. It's the story of the scorpion and the frog. Right? They get to both the scorpion and the frog. They're sitting on the bank of a little river. The scorpion wants to get over to the other side and says to the frog, "Will you give me a lift? Will you let me ride on your back and take me over there, because I can't swim?" And the frog turns to him and says, "Are you kidding? You're a scorpion. You'll kill me." And the scorpion looks at the frog and says, "Now, wait a minute. Why would I do that? I want to get to the other side just as bad as you do." And the frog thinks about it for a while and says, "Hey, logically, that makes a lot of sense. So, yeah, I'll go ahead and give you a ride." Scorpion hops on the back. The frog is, halfway, more than halfway, about 3/4 of the way over the river, and boom, a sting. The scorpion stings the frog. Of course, the frog looks up at him and says, "Why'd you do that? I'm going to die." And the scorpion says, "Because I'm a scorpion, and that's what scorpions do." Fast forward to what in the heck is going on over in the Middle East between the U.S. and Iran, with regard to nuclear weapons and with regard to this whole nuclear thing that's going on. Who's the scorpion and who's the frog out there? And do you really think that a scorpion's going to change who it is that they are? Now, this coming from the, not too political out here, but there are things that just absolutely do piss me off. And this, as you can tell, is certainly one of them. Because you and I are the shareholders here. And as I say, this has nothing to do with regard to which side of the aisle it is that you're on here. But you tell me who's the scorpion and who's the frog here. And do you really want to get stung? This coming from the group of people that decided to do the whole Bo Bergdahl deal out there. Are you kidding me? Really? And so I gone off a little bit off of my rocker here, but somebody's got, hey, that's my choice. That's my choice with regard to this couple hours here. But it's this weekend when things may come to a head out here. And look, folks, you and I are the shareholders of this great corporation of ours, the United States of America. And it's up to you and I. It's absolutely up to you and I to always take a look at both sides of the trade, as we do here, both the bullish side and the bearish side. And I have as much clarity about where the market is going to go as I do about the story about the scorpion and the frog and what the heck is going on out there. And when I take a look at our elected officials, and I take a look at the work that they've done out there, if you and I were the shareholders and they were the CEO of our corporation, we would fire their tookuses because of the type of decisions that they've made. Would we not? We would. In any event, okay, let's go back to the markets out here, and we'll do that when we come back from this break, and we'll get a feel for what else might be going on intraday and otherwise out there. This is Steve Rhodes. Of course, it is TFNN. We'll be right back, folks. Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go check out some things that are moving in the pre-markets here before the bell. You've got BioMarin Pharmaceutical closed last night at 115 and change. It's trading out right now in about the 125 level. At 125, well, it's got a swing point out here, a little doji candle on March 19th. The following day, a little bearish engulfing candle out here. So the top of that is really a resistance level. 129.59 is the number. If it can take that level out, it becomes a huge A to B equals CD to the upside inside of this equity. So if it could do that with volume, and volume on this equity is only about 1.6, maybe 2 million shares out there. So today is going to be a pretty telling day for this equity. It's either going to find resistance in that 125, 129 level. If it takes it out, then it says 151, probably 162 would be its price target out there. You've got OLN as a ticker symbol. That's a result of what Dow's going to spin that entity off, so we won't take a look at that. Let's take a look at Carnival Cruise Line, Carnival Corp, CCL. They were out with numbers here, looks like before the bell, about 3.5 billion in revenues versus 3.6. Are you a cruiser out there? I went on one cruise, and it's I like cruising on smaller boats, not on those big machines out there. They had net income of $49 million versus a loss of $20 million. So closed at $44. It's trading right now at $47. Now, in the case of Carnival Cruise Line, it's got resistance at about the $47-ish area. So it's going to try to take that on. It's got a swing point from back in January 2015. The top of that is 47.44. It's been consolidating really for about a period of this is a daily chart out here. So for about a period of 3 months, 4 months out here since December. Bottom of the consolidation, 42. Top of the consolidation, 47. So you got about a 5-point move. If it takes out 47, this equity probably runs to the $52 area. That is Carnival Cruise Lines. Royal Caribbean Cruise Lines as well. RCL is the ticker symbol. That's also trading to the upside out here. That's trading up about $1, maybe $2 out there. Yahoo, we haven't looked at Yahoo for a while. Trading out at 44.47. It's up by about $1 right now, trading out at the $45 level. Yahoo's got this big, huge line of resistance out here where it had gapped down on January 29th. So this has been trading between the 46 level to the 42 level out here. It needs to really close that window in order for it to move higher. And that would be 46, looks like 46.30 is where it needs to close above. Now, to the downside out here, you've got OHR Pharmaceuticals. Now, this thing is really taking a hammering out here. Some final top-line data from one of its drugs out there. Doesn't look like it's got the type of results that shareholders like out here. Was closed at $8.73. It's trading at $3 right now. Now, this equity broke out with some nice volume back on March the 2nd, had about 4 million shares. This is going to trade well below that level. In fact, we need to put this on a much longer-term chart in order to get a feel for where this. We'll put this on a monthly chart out here in order to get a feel for where this is headed to. So at $3, $3, holy shnikes. It basically almost gets you back down to the 66 type cent level back in 2011. That's what the monthly chart, let me see what the daily chart or weekly chart shows out here. Yeah, it does not look good for this equity whatsoever. And there are folks that are in this equity probably still to this day holding it in the $20 range. That ticker symbol OHRP, not a good looking equity. You've got, let's see, you've got oil pulling back a bit. So we've got the USO on my chart. Let's take a look at light sweet crude. It's trading out at $50 and change out here. Let's go see what it is doing. Let's pull this back. So light sweet crude, really not that big of a deal with regard to its pullback. We just take a look at retracements out here. The retracement, I was going to try to do that. Let's try to grab the actual right tool. So the retracement from high to low, it's made the 0.618 retracement. Did that yesterday. Did it with a nice wide-ranging box. So it's not unusual for it to just simply go ahead and pull back. It very well may, in fact, be pulling back and trying to form the B to the C leg of an A to B equals CD to the upside out here. So a little further retracement. Those types of retracements that I'm referring to inside a light sweet crude could take price down to the price points of about, let's see, where is this? About the $49 to $47 level. 47 might be a nice entry point inside of light sweet crude if it could make it down to that area. Also moving to the downside here this morning, let's see, you've got Seadrill Limited, SDRL, trading off a little over $1 here this morning. It's trading out at $9.80. $9.80 is going to go ahead and take this equity into, it looks like a little hammer candle down here on March the 16th. That low is $8.58. You close below that, bad news for Seadrill, SDRL. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow up 18 points, trading out at 17,698. The S&P is up 3 at 2,059. Composite up 14 at 48.77. Russell 2,000 up slightly, up a couple points at 12.33. Gold, we haven't talked about gold. You've got gold back $7 right now. The U.S. dollar index is off about 10 cents right now. If we take a look at gold, let's go take a look at it. We've switched over to the June contract. That's what we're looking at on my screen. If we take a look at it, we've had a lot of nice up sessions here over the last week, over the last 7 trading sessions. We've got an inside day that's going on. Maybe it's just kind of a quiet day inside gold. Remember, if we have an inside candle session, that means you don't even see a piercing of 1194.80. The meaning behind that is just simply that the trend will continue, and I expect that to continue even if gold does pull back out here. You know what I like to see? I'd like to see gold actually pull back in order to be able to load up on some additional mining equity positions out here. We'll see what gold does. I don't know if it will or it won't. What I do know is if we have an inside day today, that its message is relatively clear. It is very clear, and that is that the current trend that it came from will continue. So we'll see how that trades out today. Let's go look at the silver, which has been stronger than gold. It's off 7 pennies this morning. That too looks like an inside day as we speak right now after a number of nice up sessions. So the low that you're watching for inside of silver, not that it's a huge deal, but 1691 is that number. We've gotten to 16.915, so off by a half a penny. That still works for us as a inside day. If we do see a pullback now, in the case of silver, it has made the 0.618 retracement level. So that was at 1728. And again, you just make these, these wonderful Fibonacci numbers out here. You have to respect them. They're areas, they're floors where traders get off the elevator, so to speak. So a retracement now down to 1658, maybe 1607. Would be pretty nice. The CFTC commitment to traders data, that will be out at 3:30 this afternoon. So I'm eager to see what commercial traders have done through this past Tuesday out here. May give us some kind of a clue. Remember, we can't use that data as a timing tool, but we sure as hell get the we sure as heck get the idea as to what the smart money, the presumed smart money, and they typically get it right, what they are thinking out here. And I can tell you what they have been thinking over the course of the last couple of weeks is getting the heck out of Dodge with regard to their short positions out there. And that says that this move that we've seen here, it says to me, the move that we have seen here in gold is not over, and this is only the first leg inside of the market. So that's what's going on inside that equity. If we look at the currency market out here, if we look at the euro here pulling back just a bit. Now, yesterday, interestingly enough, when we take a look at the euro, had an outside day. What's that mean? It means both the prior day's high and low was exceeded, and then you had a little bearish engulfing candle. So in the case of the euro, which I believe on the weekly chart and the weekly chart has more meaning than the daily, had a weekly key reversal session out here. Let's just take a look at from low to the high out here. Right now, all we've seen is a 0.382 retracement. So the real question is the euro in the process of forming that B to a C point of an A to B equals C to the upside? If this level here holds, boy, that's a really strong A to B equals C to the upside. If it doesn't hold, we ought to expect the euro to pull back to about the 1.0685 level, and if that and that actually it looks like that's some TAS profile lows out here, so that would be a nice, that's a box that just formed today. I don't know that it's going to pull back to that level. You really want to go down and take a look at an intraday chart to see what kind of pattern might be out there. I don't know. We'll switch over to a 30-minute chart here real quickly just to take a look at it. And on the 30-minute chart, the A to B equals CD to the downside has not completed. And if we were to take a look at what that price point would be, that price point would give us a projection here. You really have to come all the way down to this. That's that price projection. If this were to come to fruition, this would give us a 1.0648. Let me put the daily back on the chart, and let's go see what that retracement level was on the daily. I think it's right around that level, 1.0685. So that would be the ideal trade setup if, in fact, that were to occur inside of the euro U.S. dollar. If we take a look at the euro Japanese yen out here, yesterday all that did was just took a little bit of a breather out here. We haven't seen a ton of movement in the currency market. In order for these markets, in order for Stevie's fruition to come true, and it's not really by fruition, it's just really taking a look at some historical data. And if we take a look at it, the euro Japanese yen is going to have to also take off to the upside in order for it to move higher through that May time period out there. So we'll see how that happens. Now, with regard to things moving inside the markets out here, again, BioMarin Pharmaceuticals, we took a look at that before the open. That's up now $12, about 11% out here. The IBB, let's go take a look at the IBB because that's had the biggest impact on so had one of the largest impacts on the pullback inside the NASDAQ composite. So it's a bit higher here this morning. Now, yesterday had some pretty decent volume, a little bit about the same as the prior day, 4.8 million. Yesterday was 5.2 million shares out here. If we take a look at the bounce inside this, you'd say getting up to 354.65. That would be one area to look at. That's the bottom of the TAS profile box. Old support could become new resistance out here. If we take a look at retracements on any ensuing bounce out here, we'd be taking a look at from high to low, that high from the March 20th level. Geez Louise, come on, work for me, would you? That's the retracement ruler. There we go. So right now, today, this morning, almost back to the 0.382 level, which is 349. If it can move above that, you're looking at a move to about the 359-ish level. So 354, 359, very likely the price move and price target behind the IBB, the biotech for the NASDAQ out here, biotech ETF for the NASDAQ. Also moving to the upside, well, we looked at Royal Caribbean. We have not looked at Kite Pharmaceuticals. Yeah, let's go take a look at that, and then we'll go shift over to the things moving to the downside. So KITE, a little bit of a bullish engulfing candle as we speak right now. Let's see, this thing here moved lower with some nice volume here yesterday, but it's got a little high volume high out here as well. So you've got some competing volume-based patterns out here inside of the market. This thing made a high on March 20th and did that with 3.5 million shares, and yesterday's low was with 3.1 million shares. Let's go see what was that actually pulling back into Kite Pharma. Let's get rid of the A to B equals C. Let's get rid of some of these lines out here in the chart. Now, this equity broke out all the way back here on December the 9th. Did it with 1.5 million shares to the upside. Price did not pull back. It pulled back into the breakout area, but it did not pull back to the bottom of the breakout. And so its move to the downside could be over. Could be over. Let's put this on a weekly chart out here. Let's put this on a weekly chart. In fact, then we'll go over and take a look at some weekly charts just simply for our markets out here. I mean, the S&P, the Dow, since I've only got hour one here today. Inside of the weekly chart for Kite Pharma, this has a high volume high that has not been tested, and that was the week that began January 12th. So Kite Pharma ought to make its way back up to $89.21, that high volume high on a weekly basis out here. Okay, so let's go get a feel for what's going on weekly wise. How do we best want to do that? Let me see. Do I want to pull this out here on my screen? Let's do this. Let's take a look at the NASDAQ composite. So let's go see what we've got forming out here on the composite out here. We'll take a look at candle-wise what we have. We'll take a look at, well, we got to not pay attention to these market profiles out here. So at this stage of the game, we've got price that has moved back into the February 12th area. You know, just really more of, if anything, it's setting up a consolidation. So you've got this little rising window, this little gap up. That is a support area. That's between the February 11th, and February. Oh, that's a daily chart. I said I was going to look at a weekly chart. Good Lord. What the heck was I thinking out here? But still, we did have on the daily chart, you've got that little consolidation out here. Okay, now we've got the weekly chart on our screen out here. So we can see some real resistance up here at the highs because we've got these little bearish candles that have been forming. You had a nice little, small little bullish engulfing candle March the 6th. This week right now, you've got, in essence, bearish engulfing in that candle. So this is these highs. Once the NASDAQ is able to clear these highs, those highs being, we'll call it 5,008, then that will really give you the signal that the market is ready to take off topside, because that simply will be price getting above a resistance area. That's what's going on inside of the composite. Let's go take a look at what's going on inside the New York Stock Exchange. Let's go ahead and pull that up on our screen out here. That way we get a little bit better feel for the breadth of the market and what it is doing out here inside the NYSE as we pull this back. Again, nothing more than this upper level consolidation area. You know, it's got the major reversal signals out here. A little dark cloud cover candle that may be forming this week. The day's not over, therefore the week is not over. And, you know, it's one of the weaker of the reversal signals inside of the market. Of course, one of the things that we do know is that the sellers do have control inside the NYSE. We know that just simply by taking a look at the summation index. We didn't do that at all yesterday. Let's go take a look at it today. Let's take a look at the summation index here for the NYSE, beginning to turn up a bit. Now, with regard to net advancing issues today, just in case you were going to ask me, what do we need today to be looking at, I will have to pull up another chart. Give me a minute here to do that. What the New York Stock Exchange would need, if you were to get 1,160 or more net advancing issues today, then that would go ahead and turn the price oscillator up above zero. The sellers would have lost control. That would suggest to me that the bottom would be in the market here. That's the message of the wider swath of the market. Inside of the NASDAQ Composite, which has been weak out here. Its price oscillator also below zero. With regard to what it would need to do, let me see. I think I've got that written down someplace else on another chart out here. NASDAQ Composite also needs 1,063 net advancing issues today in order for it to get above the zero line. If, in fact, you were to see that along with the New York Stock Exchange, then its message would be that the lows of yesterday is that bottom, and you can forget about next Tuesday being that number. However, if we do not see either of those conditions take place, then what we're looking at is probably some additional moves to the downside in the early part of next week, or just simply as the market continues to try to chop and form out its bottom. Now, the Dow itself, the Dow out here, not really a ton of price damage, all things considered. Yes, price came back and tested the March 11th swing point. Its oscillator, do I have that number? I do not have that number out here. But at this stage here, what we know about the Dow is it simply has come back. It's tested that swing point. Oftentimes, that can be a area where, that's always your target. You're always looking at swing points for targets. We use swing points to use for our retracement ruler. We also use swing points as targets. That's where you have that so-called 100% move of a move. That is what we have seen inside of the Dow as it's gotten down to that level. If it breaks this area, it does suggest to me that we would see price move all the way back into that February 2nd level. That's what's going on inside of the general markets. If we go take a look at some of the ETF structures out here, and we take a look at the ETFs for the indices, I think the biggest message for me came yesterday with regard to the IWM, the Russell 2000. If we take a look at the Russell 2000, now this is on a daily chart, but as long as I've got the weekly chart up here, the Russell 2000 this week, volume of 118 million shares. Last week, 151 million shares. So, and you've got an outside reversal bar as we speak right now. But here, I think that was the daily chart that really gave me more of a message. If we want to understand what the Russell 2000 did. The Russell 2000, let me turn a couple things off on the chart. It'll be a little bit easier for you to see out here. So let's turn off the TAS box. Let's turn off the A to B equals CD. Let's turn off the moving averages. Well, we're going to pretty much get rid of just about everything. Let's get rid of the relative strength. Okay, so now we got a nice, big, clean palette for us to take a look at. Now, gaps are your friends. Gaps are your friends because what they typically will do is they will be that wide price spread bar that you're looking for. Now, in the case of the IWM, on the trading session of March 12th, it gapped up, and it gapped up with 41 million shares. That gap is going to be your first level of support. Your second level of support on any move back happens to be the bottom of the gap. In this case here, it'd be the high of the March 11th candle. That price point is 121.14. Now, what price did yesterday was it pulled back to test that gap being 121.74. And it did it with 26 million shares. 26 million shares was going against 41 million shares. Now, remember, my belief, my philosophy is this, is that the Russell 2000 will not be the index that leads the market higher. Instead, it will be the leader in the front of the pack in the relay race. And that's what you want to see, it taking on the number one position. Now, inside the Russell 2000, oftentimes, if there's going to be real cracks in the armor of the market, you will see the Russell 2000 crack under pressure. Didn't do that yesterday. All it did was come back and test a level of support on light volume. This is Steve Rhodes with TFNN.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow is up 16 points right now. S&P's up 3. Composite up 21. Russell up 4. So as we were going into that break, we were just taking a look at the Russell 2000, the IWM, and I can't stress the importance here. If the market was really going to crack, really going to fall apart, and look, I can't control what happens at 9:55. I can only tell you what's happening at 9:54, and then I can tell you what I had anticipated as we began the week with regard to the market. And each of you know that out there. So nothing has changed with regard to the mere fact that, in my opinion, that the market is just really in the process of forming that next springtime low out here. The markets will move higher after that. And in the case of the IWM, it gave us a very clear message yesterday. Yes, it did not get down to the swing point that formed here on March the 10th. It didn't need to get down there. All it needed to do was come back and test the breakout gap. That breakout gap was the trading session from March the 12th, and it tested that gap, on substantially lighter volume. Not half, but about 60% of the volume, 41 million versus 25. I don't know. Somebody's got to go ahead and do the math out there for us. Now, that's and so I think there's a real clear message. There's a real clear message, in my opinion, with regard to what it wants to do. Now, you can take a look at it and say on March 25th here, we saw volume moving down 42 million shares. That was, volume off of the highs. That 42 going against 42 on the breakout. To me, that's even Steven out here. And it wasn't really until the top or the bottom of that breakout, the low of March 12th was tested that it really revealed any kind of information for us out there. Now, with regard to the other indices out here, if we take a look at the diamonds, which has certainly been a weak link out here, the diamonds did test the bottom of that March 11th area, and it did it with some volume. There was 5.5 million shares on March 11th, and yesterday's test and rejection was 6.6 million shares. So today, the low that is 176.23 is a key number. We've only seen 176.33. From the bullish side, you'd like to see a test of that low, 176.23, do it with less than 5 million shares, 5.5 million shares. And then you'd like to see it clear the top of that swing point at 177.29. Folks, if you're, thanks so much for joining. I had the wrong clock up on my screen. Hey, have a fantastic weekend, and I'll look forward to seeing you bright and early Monday morning. Take care, folks.